Before starting today's video, I would like to thank all my viewers and subscribers for the overwhelming response you have given to my last video of Axis Small Cap Fund detailed review. Please continue your support by watching my video, and if you find the video useful, do hit the like button and subscribe to my channel if you have not done till now. Your likes on the video will encourage us and YouTube will promote the video to more viewers. In today's video, we will discuss about one more good performing small cap fund, that is Canara Robeco Smallcap Fund. I have added two more technical parameters in the analysis. The first one, the volatility, and the second one, risk to return analysis of this fund. So please watch the video till the end to decide whether to invest in this fund or not. The above two parameters have been added on suggestion of one of the subscribers. Please do send in your views and suggestions on the video. You may comment in the comment section or can reach me at the email given in the description. Hello everyone, I am Dhaval and welcome to my channel DIY Finance. To start with, we all know that Canara Robeco Smallcap Fund has been one of the good performance in its category, that is the small cap category. Here we will be taking into consideration data of direct plans only. Firstly, let's look at the basic details like AUM, that is the total asset under management, which is around 2000 crores, which is okay for a small cap fund, and the fund manager should be comfortable managing this AUM. While the expense ratio is 0.48%, that is less than 0.5% and quite low as compared to other schemes. The benchmark index, that is the reference against which the scheme is compared, is Nifty Small Cap 250. Now let's look at the sector-wise allocation. From the table, it is very clear that the fund is heavily invested in finance and services. Finance being a core sector and services being an evergreen sector, and quite a good performing small size companies form a part of this sector. And when compared to its benchmark, its allocation in both these sectors is on a higher side. This can sometimes lead to performance issues when this sector does not perform well. As evident, Canfin Homes and Angel One are the main stocks of the financial sector, whereas VRL Logistics is the major contributor in the service sector. Here also, the stock selection looks good. On checking the portfolio allocation, it is evident that the small cap shares form more than 50% of the portfolio, whereas mid cap shares form other 42%. And only negligible 2.74% is allocated to large cap stocks. With above allocation, the fund is able to provide a good downside protection during bad phase and also be able to generate a good return with less risk. I will talk about the downside risk in the technical analysis section. The portfolio allocation is quite good and very suitable for long to medium term investors. Mr. Shri Datta Bhandalwardar, hope I spelled the name properly, has been managing the fund since 2019, that is almost since the inception of this scheme, and that too very efficiently, and hope that he continues in future also. He has been recently joined by Mr. Ajay Khandelwal in December 2021. Here, this long-standing association of the fund manager with the same scheme is quite positive and an advantage for the scheme. So now let's compare the trailing and rolling returns. On comparing the trailing returns for 3 months, 6 months, 1 year and 3 years, it easily beats the benchmark and the category average with a good margin. Returns of more than 3 years is not available as the fund is only around 3 years old. Hence, there seems no worry for the investor as the fund has performed well in this period. As 3 years rolling returns is not available, let's check the rolling returns of 1 year only. Here, the performance of rolling returns is better than the benchmark and has been able to beat the benchmark more than 84% during the returns period, which is also quite positive for a fund. Now let's see the fund performance on risk parameters. Here we compare the parameters with the benchmark index and category average. The first one, mean returns, that is the average return in a year, which is 33.65 and is more than both the category average and the benchmark. Here the higher the value is better. Second one, standard deviation, that is a tool to measure how much the return has deviated away from the mean return, which in this case is 25.68 and is also less than both the benchmark index and the category average. Here, lower the value is better. The third one, Sharpe ratio, that is a tool to measure the risk adjusted return, which is 1.17, which is more than both the benchmark index and the category average. Here, the higher the value is better. The fourth one, beta, that is the volatility of the scheme compared to the benchmark, which is 0.83, which is less than the category average. Here, lower the value is better. The fifth one, that is alpha, that is a tool that measures how much better the fund has performed compared to the category. Here, it is 13.77, which is far more than the category average. Now let's see the upside and downside capture ratios. The upside capture ratio is the measure of how much the fund performed relative to the index during the period when the index rose. Here, the value is 102, which indicates that the fund outperformed 2% more than the index during the rise period. Here, higher the value is better. The second one, the downside capture ratio, is the measure of how the fund performed relative to the index during the period when the index has dropped. Here, the value is 72, which indicates that the fund declined only 72% as compared to the index during the fall period. Here, lower the value is better. Now let's see the risk to return graph. Here on x-axis we have standard deviation, whereas on y-axis we have total returns. It is very evident from the graph that the fund has better total returns value with lesser standard deviation as compared to the category average and the index, which indicates that the fund has been able to generate good returns with less volatility than both its category and index. Here on all parameters, Canara Robeco Smallcap fund performs better than the benchmark index and category average, which is very positive sign for a fund. So now coming to the conclusion that what should investors do? First, the existing investors should continue their investment but keep a close watch on the performance, as the fund is only 3 years old and does not have a large past performance history. For the new investors, they can start new investment as it's a good performing fund, but also should keep an eye on the performance of the fund. I would like to add that I do not have Canara Robeco Smallcap fund in my portfolio, but I am planning to start my investment in near future. I will again try to review this fund after 6 to 7 months and check its performance. So stay tuned to my channel. Please subscribe to my channel if you have not done till now, and also press the like button. To check my older videos, click on the attached video cards to watch the videos. Thank you.